Two versions of you wake up on the same morning, same age, same salary, same $90,000 sitting in the bank, same partner, same plans, same fear about whether you're making the right decision until today. Today, you have to choose where that $90,000 goes. One version of you signs for a house, 35 years of mortgage payments, 35 years of repairs, taxes, insurance, and one address that becomes part of your identity. The other signs a lease, 1 year at a time. One version gets a key and starts building a home. The other gets a key and starts building an exit. And for the next 35 years, both of you will wake up under a roof. But almost everything else will slowly become different. Because this isn't really a question about whether renting is cheaper or buying is smarter. It's a question about what kind of life you want to buy with the next 35 years of your time. You're 32. You make $80,000 a year. You've managed to save $90,000. And you've finally reached the moment you've been waiting for. The house costs all $400,000. The mortgage is going to follow you for decades. The apartment costs $200,000 a month. Neither choice feels obviously wrong. That's what makes it dangerous. Because when you're standing there looking at two pieces of paper, you're not really choosing between a house and an apartment. You're choosing between two futures that look almost identical on day one. And you won't know which one you prefer till day 12,775. The first version of you signs the mortgage. The pen feels heavier than it should. You initial page after page. Down payment. Closing costs. Taxes. Interest. Then you slide the papers back across the desk. The house is yours. Or at least that's what it feels like. You drive home with a key in your pocket and $90,000 and almost completely gone. That night, there isn't much furniture. You sit on the floor in the empty living room. The room echoes. Your partner sits beside you with two containers of takeout. You look around. 4 walls. A ceiling. A window. And something strange happens. You smile. Because for the first time, nobody can tell you that this isn't your home. You take a marker and write the date on the inside of a closet door. Your partner laughs. Why? You shrug. Because someday we'll forget what this day felt like. Across town, the other version of you signs a lease. Same $90,000 and same takener. Same excitement. But instead of sending most of that money into a house, you keep it invested. The apartment isn't yours. You can't paint every wall. You can't knock anything down. You can't decide what happens when the owner wants to sell. But you can leave. And that one difference doesn't feel important yet. Not even close. You unpack the first box. Then another. You look around. The apartment isn't permanent. But maybe that's the point. You still have options. And for the first few years, the two lives barely look different. The homeowner makes a mortgage payment. The renter makes a rent payment. Both complain about prices. Both go to work. Both come home tired. Both order pizza on Friday night. Both think they made the right decision. Then the first repair arrives. It's 2:14 in the morning. The homeowner hears water. At first, it's just a drip. Then another. Then a sound coming from somewhere behind the wall. You walk downstairs. The water heater is leaking. You stand there barefoot in the cold basement, staring at a problem that didn't exist yesterday. You call someone. They tell you how much it will cost. You laugh, not because it's funny, because apparently owning the house means owning every problem inside it too. There is no landlord, no maintenance department, no person whose number you can text. The name on the deed is yours, so is the bill. Across town, the renter hears a strange noise too. You send one message. Something's wrong with the heater, bah. The next morning, someone arrives with a toolbox. You don't even know his name. He fixes it, then leaves. You go back to work. The difference seems small, but small differences have a habit of becoming enormous when you repeat them for 35 years. Then the rent goes up, not dramatically, just enough. $1,000 becomes $2,080. Then $2,300. Every year, another number. You didn't buy anything different. You didn't get a bigger apartment. The walls didn't become nicer. But the price changed, and you didn't get a vote. The homeowner has a different problem. Property taxes rise. Insurance rises. The roof gets older. The kitchen needs work. The house isn't free. Far from it. But part of the mortgage payment is slowly turning into ownership. And that distinction starts sitting quietly in the background. You don't notice it every month. You notice it years later. 3 years pass. The two versions of you meet the same financial milestone. The homeowner has a house with a mortgage. The renter has a growing investment account. If you only looked at the numbers, the difference isn't dramatic yet. Then life changes. A child arrives. Suddenly, the question isn't just where you want to live. It's where your child will grow up. The homeowner carries a crib into the spare bedroom. You assemble it badly. Your partner laughs. The baby cries. You spend 3 hours trying to make the room feel perfect. And eventually, at 3 in the morning, you sit beside the crib and realize something. This room might become part of your child's memories. The same hallway, the same backyard. Maybe 20 years from now, your child will still remember the sunlight coming through that window. Across town, the renter puts the same crib together. Same baby, same sleepless night. But there is a small difference. The lease expires in 9 months. Nobody thinks about it. Not yet. Then, 2 years later, the landlord decides to sell. You receive an email. Professional, polite, completely indifferent to your life. You have 60 days. You stare at the screen. Your child's room is already full of toys. The kitchen has photographs on the refrigerator. The apartment finally feels like home. But home, you realize, was never something you owned. You start packing. The homeowner doesn't. And for the first time, buying feels like more than a financial decision. It feels like protection. But then something happens that the homeowner didn't expect. A job offer. A serious one. Different city. Higher salary. Better career. The renter reads the email and smiles. There is nothing to sell. No house to list. No buyers to wait for. No open houses. No 6-month plan. You can move. The homeowner reads the same email. And suddenly the house that once represented freedom feels like an anchor. Selling takes time. Renting it out creates another responsibility. Moving means leaving behind the place where your child has grown up. So you turn the job down. You tell yourself family comes first. And maybe it does. But somewhere inside, you wonder what would have happened if you had been able to leave. The renter takes the job. The family moves. The child cries for the old house. For a few weeks, the new city feels wrong. Then something strange happens. The child makes a friend, learns the new school, finds a favorite restaurant, starts riding a bike down a different street. The old home becomes a memory. The renter realizes something. Moving didn't destroy the family. It simply changed the location of the memories. 10 years pass. Now the numbers begin to separate. The homeowner has built equity. The renter has built an investment portfolio. The homeowner's mortgage payment feels familiar. The renter's rent feels increasingly painful. But the renter's investments have been growing quietly in the background. Every month, money goes into the market. Then it grows. Then it grows. And eventually, the numbers start doing something neither version of you expected. They begin moving without you. This is where the comparison becomes uncomfortable. Because buying gives you something powerful, stability. Renting gives you something powerful, to flexibility. And both have a price. The homeowner has less freedom to move, but more control over the place where they live. The renter has more freedom to move, but less control over the price of staying. Neither one is free. You're just paying in different currencies. The homeowner pays with money. The renter sometimes pays with uncertainty. The renter pays with rent. The homeowner sometimes pays with opportunity. And life keeps testing both. At 45, the homeowner replaces the roof. It costs more than the first car you ever bought. You stand outside watching workers tear apart something you thought would last forever. You remember the first night in the house. The empty room. The marker on the closet door. The promise that this would be worth it. Across the country, the renter moves again. Not because the landlord forced you out this time. Because you found a better opportunity. You choose a different city. A better neighborhood. A new beginning. You don't have to ask permission. You just pack. The investment account comes with you. The freedom comes with you. But so does the knowledge that you'll never have one permanent place that belongs completely to you. And that's the trade. At 50, both children are older. The homeowner's child has spent almost their entire life in one house. They know every corner, every creaking floorboard, every scratch on the kitchen table. There are pencil marks on the wall showing how tall they were at 6, 8, 10, 12, 16. The homeowner touches the highest mark. The child has grown. The house has become a timeline. Across the country, the renter's child has a different kind of timeline. 5 schools, 4 cities, different bedrooms, different streets, different friends. And one day the child says something that surprises you. I kind of like that we moved. You ask why. They shrug. I got to see more. Neither parent knows what to say, because both lives produce something valuable. One created roots, the other created range, and neither can be bought afterward. Then comes the moment people usually ignore. Retirement. The homeowner is 62. 35 years ago, the mortgage felt enormous. Now there are only a few payments left. The renter is 62 too. The investment account is much larger than it was when this began. But rent is still due. And this is where the spreadsheet starts screaming for attention. The homeowner's mortgage eventually reaches 0. The renter's rent doesn't. The homeowner wakes up one morning and makes the final mortgage payment. 35 years. Done. The bank is finished. The house is finally, completely theirs. You walk through the rooms, slowly. The same hallway, the same kitchen, the same bedroom, the same closet where the date was written all those years ago. You open the door. The writing is still there. You run your finger over it. 35 years disappeared. And yet the room remembers. But then you remember something. The mortgage ended. The expenses didn't. Property taxes remain. Insurance remains. Maintenance remains. The roof will need replacing again. The house is yours. But ownership never means free. Across the country, the renter is looking at a different number. The investment account that started with $90,000 decades ago has grown into something substantial. The money has had 35 years to compound. The renter still pays rent. But the portfolio has become large enough that the rent no longer defines the person's financial life. And now something interesting happens. The renter looks at a house, not because they have to buy one, because they want one. And for the first time, they can choose. Maybe they buy it. Maybe they don't. Maybe they move to another country. Maybe they travel. Maybe they keep renting the apartment because they like the view. The point is that the decision is finally theirs. The homeowner has a different kind of freedom. They can stay. Nobody can raise the rent. Nobody can sell the building. Nobody can send an email saying they have 60 days to leave. The house has become an anchor. And sometimes an anchor is exactly what you need. But an anchor can also keep you in one place. That's the part no calculator can fully capture. Because 35 years later, the question isn't simply, who has more money? It's who lived the life they actually wanted. One version of you has a house filled with memories. The other has a portfolio filled with options. One has roots. The other has mobility. One knows exactly where home is. The other has learned that home can exist in more than one place. And somewhere in all of that, the original $990,000 has become almost irrelevant. Because the real cost was never the down payment. It was the choices that came after it. The jobs you accepted, the jobs you rejected, the cities you stayed in, the cities you left, the repairs you paid for, the rent increases you tolerated, the investments you made, the memories you created, the opportunities you couldn't take, and the opportunities you never had to think twice about. 35 years ago, two versions of you stood at the same table. Same money. Same age. Same future. One signed a mortgage. One signed a lease. And from that tiny decision, two completely different lives unfolded. Now imagine you're standing there again. Except this time there aren't two versions of you. There's only one. You have the $90,000. The mortgage papers are on one side. The lease is on the other. And you know something you didn't know that morning 35 years ago. Neither decision guarantees wealth. Neither decision guarantees happiness. Neither decision is automatically the smart one. Buying can build equity, stability, and a permanent place to call home. Renting can preserve flexibility, mobility, and the ability to invest your capital elsewhere. The smartest choice depends on the price, the rent, the mortgage, the investment returns, the taxes, the maintenance, the length of time you actually stay, and most importantly, the life you want to live. But there's one thing you can't calculate, the life you don't choose. Because once you sign, time starts moving. And 35 years later, you won't be able to go back and see what the other version of you experienced. You'll only have your memories, your how investments, your family, your choices, and maybe one quiet question. What would have happened if I had taken the other door? That's the real cost of this decision. Not the interest, not the rent, not the repairs, the other life. So before you decide whether you're buying a home or renting one, don't just ask which option makes the most money. Ask yourself where you want to be when the 35 years are over. Do you want the worn key? The marked up door frame? The house where your child took their first steps? Or do you want the freedom to pick up those keys, leave, and start somewhere completely different? Because 35 years from now, the money will be part of the story. But it won't be the whole story. You'll be the story. And whichever door you choose, you won't just be paying for a place to live. You'll be paying for a life.